This is Nightly Business Report with Bill Griffith and Sue Herrera.
Cutting through the noise, the trade tit for tat, the Fed guessing game. While important, what really matters to investors is the bottom line. And two companies made that evident today.
New risk? Why weakness in Europe could start to spread here and make things a little more difficult for investors.
Is the Bakken back? We're taking a trip to that region that went from boom to nearly bust to boom again, all in just 4 years. Those stories and more tonight on Nightly Business Report for Wednesday, May 23rd.
And we do bid you good evening, everybody. Welcome. It turns out earnings really do matter. That was made clear today on Wall Street when two well-known companies, each operating in very different industries, both gave investors new information about the thing that matters most, the bottom line. And both stocks saw very big moves in response. Let's start with General Electric. The company's CEO said today he sees no profit growth at its troubled power unit this year. As part of a presentation that was posted on GE's website, John Flannery said he expects the market for heavy-duty gas power turbines to remain weak through 2020. It was a reminder to shareholders that changes at the 126-year-old conglomerate will not happen overnight. To quote Mr. Flannery, he said, "This is not going to be a quick fix." That sent the stock lower by 7+% today, its worst day in more than 9 years.
And now to Tiffany. While it may not be as widely held as General Electric, today it proved that its turnaround plan is starting to sparkle. The luxury retailer's sales and profits trounced forecasts thanks to strong demand in the Americas and the Asia-Pacific regions. Tiffany also raised its annual earnings and revenue outlook. The company's new strategy included selling lower-priced items, which attracted millennial shoppers. And it paid off for shareholders. That stock surged 23%, its best day in more than 17 years.
So clearly investors were watching earnings, but they also paid close attention to the Federal Reserve. Stocks turned positive after the minutes from the central bank's most recent meeting showed that bankers would be comfortable allowing inflation to temporarily run above its 2% price target. It's not often that the Fed minutes move the markets like that, but today that's exactly what happened, and the stock rose into the close. The Dow finished up 52 points. It had been down 167 points. NASDAQ added 47. The S&P was up by 8. Steve Leisman has details now on that big debate within the central bank.
Fed officials are seriously debating a question they usually ask at the end of hiking rates. How much further to go? The minutes of the Fed's May meeting show at least a few central bankers answer the question, not much further at all. They believe the economy may have changed so much since the Great Recession that, quote, the federal funds rate could be at or above their estimates of its longer run normal level before too long. To be sure, that's only a few of the 15 members of the committee, but with the Fed right now at a funds rate of 1.5 to 1.75%, it's an amazing discussion to be having. Fed funds can normally top 5% in a cycle, but it seems unlikely to go there this time around, and that is welcome news to the stock market. That wasn't the only dovish or easy money type comment made by the Fed in their minutes. It was also noted the Fed could let inflation run above its 2% target for some temporary period of time. It didn't specify how long. And overall, the Fed saw solid economic growth and a strong labor market. But it wasn't too concerned about wage gains driving up inflation. The Fed did worry, though, that fiscal stimulus from the tax cut could overheat an economy already running at potential. Another concern, the president's trade policies. Fed officials said in the minutes that their own business contacts are telling them that the uncertainty surrounding trade talks could hold back business investment and reduce business sentiment. Despite these dovish signals, the Fed also made clear the next rate hike is likely coming soon and suggested maybe as soon as June. But the bigger debate now, how many more come after that? For Nightly Business Report, I'm Steve Leisman in Washington.
There were new developments on the trade front late today. According to the Wall Street Journal, the White House is considering the imposition of new tariffs on imported vehicles on national security grounds. Those tariffs could be as high as 25%. The report says the plan is in its early stages, though the idea has been discussed with industry officials.
To the economy now, where a new report shows manufacturing activity is at its strongest level since September of 2014. The so-called flash survey out today points to strong gains in both production and new business. It also showed that inflation is rising, with input costs increasing at the fastest rate in nearly 5 years.
Sales of new homes fell at the beginning of the critical spring selling season. According to the Commerce Department, purchases were down 1.5% in April, and data for the last 3 months was revised lower. Separately, weekly mortgage refinances dropped to an 18-year low. A sharp rise in interest rates meant fewer homeowners could benefit from refinancing their mortgage. Total mortgage application volume, which includes purchases of new homes, was also lower.
Rising oil prices are helping certain parts of the American economy, especially regions like the Bakken Formation. North Dakota's oil production is back near peak levels right now, with breakthroughs in drilling technology contributing to that resurgence. So is the Bakken back? Brian Sullivan went to find out.
This just may be the most interesting place in America. From boom to nearly bust and back to boom, all in just 4 years.
So goes life here in the plains of North Dakota and the oil formation known as the Bakken. With oil prices back above $70, drilling activity, which all but shut down 2 years ago, has resumed, and with it, so too is confidence in the local economy. Still, even if your business isn't oil prices are everybody's business.
We're directly tied to the price of oil, and unfortunately, we compete in the oil business's labor market because they're taking our employees. So yeah, we watch oil every day.
After dumping stocks in many of the companies that operate up here, investors are again becoming bullish. Shares of the biggest producer in the Bakken, Continental Resources, are up 30% this year. Other big North Dakota players like Hess, Whiting Petroleum, and Oasis Petroleum have risen even more. Continental CEO spoke with us at a conference in Bismarck and told us oil prices have hit a bit of a sweet spot.
We felt like the price is going to go up, and they have higher yet, and we still think it's going higher yet. But, you know, we're not looking at $100 oil in the future, or probably $90 oil, but certainly could be in the mid-70s and low 80s.
This is good news not just for oil companies, but the state and its taxpayers as well. Oil revenues are a huge part of the state's budget.
It's really been transformational for our state in the last 10 years because of the tremendous opportunity here, the amount of new capital that's come in from the industry, the job creation, the population increase. We've gone from having one of the oldest populations in the country to one of the youngest. New business startup, big increase in GDP per capita.
The only thing most seem to agree on about oil is that it's famously difficult, if not impossible, to predict where oil prices are going. But locals here say that, unlike a few years ago, they'll be ready for whatever happens.
We're ready this time versus last time. We kind of got caught with our pants down last time. And this time we're more prepared for it and in a lot better shape than we were in the past.
For Nightly Business Report, I'm Brian Sullivan, Bismarck, North Dakota.
You know, we often talk about the so-called wall of worry, things like rising interest rates, trade wars, higher oil prices, and inflation. But now there's another wild card to throw into that mix. It is Europe. Bob Pisani explains.
Trade wars are again moving the stock market, but Europe has bigger problems than trade. The European economy, while still growing, is much weaker than the U.S. economy. Recent data showed European manufacturing activity falling to an 18-month low, activity in the services sector at a 16-month low. Earnings growth has also been anemic. European stocks as a whole are seeing earnings growth of only about 3% in the first quarter. That's compared to 26% in the United States, which was dramatically boosted by tax cuts. The weakness in Europe has been showing up in the earnings reports. Tiffany, for example, reported stellar earnings today. Same-store sales worldwide were up 7%, well above expectations, but European sales were down 9%. Now, there's also some political turmoil in Europe, of course. The election of a government in Italy that has been hostile to the idea of remaining in the euro has also rattled markets over there. You put it all together, and it's a little wonder that the European stock market has dramatically underperformed the U.S. stock market. European stocks are essentially flat in the last 12 months. The S&P 500 in the United States, it's up about 14%. That's outperformance. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
So how worried should investors be about Europe's slowdown? Joining us tonight to talk about that, Christina Hooper is Chief Global Market Strategist at Invesco. Good to see you again. Welcome back.
Thank you.
As far as
So
Europe goes,
investors should
you say be cautious, but don't panic. Why?
Well, for some very good reasons. While there's this assumption that we're in a synchronized global economic recovery, the reality is much different. There are different headwinds and tailwinds for each economy, and different economies are in different stages of expansion. So while the U.S. just finished its 106th month of economic expansion, the Eurozone has only completed 60 months of economic expansion. So one could argue that it's still getting its sea legs, particularly given just how difficult the economic downturn was, and that it will take time. And we certainly saw it go through a breather in the first quarter that's extended into the second quarter, but I think we can attribute at least some of that to a rise in input costs. They're at a 3-month high. Oil is higher, as well as concerns about protectionism. Keep in mind, economic policy uncertainty has a very negative impact on business investment.
But when you put together the fact that the UK is having a very difficult time making any headway with the Brexit negotiations that have been going on, Bob mentioned the situation in Italy. It seems as though the landscape in Europe has changed pretty dramatically in a short period of time. What impact do you think that is going to have on the U.S.? Does it make it more attractive because it's a safer haven? Or are we going to feel some of the ripple effects of Europe?
Well, this actually makes a great case for diversification because the U.S. certainly has some drivers that the Eurozone doesn't, but the Eurozone offers some opportunities like lower valuations that are harder to find in the United States. The Brexit issue is certainly significant. I would argue that the UK is the poster child for economic policy uncertainty, and that's why we've seen growth as low as it is. But I will also argue that there is some potential in the Eurozone. The European Union has a champion, and that is Emmanuel Macron, the president of France. He's articulated a vision for reform of the European Union. And actually, the recent coalition government in Italy, which with its bold, aggressive stance, may just be the catalyst to get the EU to start reforming.
Okay. What are those lower valuations that you think are attractive for U.S. investors, perhaps? Is it by region or is it by sector? What are you talking about here?
I'm talking about region. If we were to look at the Eurozone versus the U.S. stock market, valuations are just more attractive on a PE basis, whether it's forward or trailing, as well as a price-to-book basis. So there's opportunity there. Of course, we need to be selective in this environment, but I would encourage diversification.
All right, Christina Hooper with Invesco. Thanks for your thoughts tonight. Appreciate it.
Thank you.
It is time to take a look at some of today's upgrades and downgrades. Nordstrom was upgraded to buy from hold at Deutsche Bank. The analyst cites the stock's valuation and expects many of that retailer's initiatives to gain traction throughout the year. The price target is 55. Shares of Nordstrom's rose 4% to 47.62. Shake Shack was downgraded to neutral from buy at Longbow Research. The analyst cites the 60% run-up in the stock over the past 6 months and says now is the time to stop buying Shake Shack shares. The firm is telling clients to wait for a pullback before getting back in. The stock fell just a fraction to 57.89.
Analysts are at odds over Celgene. This is a great story. The stock was upgraded to outperform from market perform at Bernstein. The analyst there says the stock's valuation is too cheap to ignore, set the price target at $102. Another analyst, though, disagrees. Argus Research downgraded Celgene to hold from buy. The analyst there says the risks outweigh the rewards, given the company's over-reliance on its cancer treatment Revlimid. Firm also cited setbacks in its product pipeline. Well, the split call, when all was said and done, had Celgene shares higher by more than 1% today. It closed at $77.66.
Still ahead, real estate goes high-tech. Diana, what's coming up?
Hold on, let me ask. Alexa, what's next?
Diana, coming up on Nightly Business Report, a great story about how Amazon is working with Lennar on smart home services, like me.
Deutsche Bank is reportedly planning to cut 10,000 jobs, or a tenth of its global workforce, according to the Wall Street Journal. The decision is part of an effort by the bank to reduce costs. And separately, Bloomberg reported that Deutsche Bank was planning to withdraw from a number of equities markets across the globe.
Comcast is preparing an all-cash bid for the assets of 21st Century Fox. That offer would be a competing and superior bid to the one Disney made late last year. Disney's bid is valued at more than $52 billion. While Comcast says no final decision has been made, the work to finance the deal is in the advanced stages. And then late today, a Fox shareholder said he is urging the company to engage with Comcast. For both Comcast and Disney, Fox's assets represent a way to better compete against Netflix. Comcast and Disney finished the day lower. 21st Century Fox closed higher. Comcast is the parent company of CNBC, which produces this program.
Excuses, excuses. Target is joining a number of retailers who are blaming the weather for its quarterly results. The retailer missed both earnings and sales expectations, and that rattled investors today. They sent shares down more than 5.5%. But there was some positive news in Target's report, and Kate Rogers has those details.
Blame it on the weather. Spring was colder than normal, rainy, and even snowy. And that meant people didn't head out to Target stores to buy items like patio furniture and grills. But the retailer said that was offset by strong sales growth in food, home, and beverage. Target is also spending a lot of money to overhaul its business. It's in its second year of a 3-year, $7 billion investment, one that continues to weigh on profits. The overhaul includes remodeling stores, building new, smaller locations, offering lower prices, and getting shoppers their orders faster.
Target is on a journey to become America's easiest place to shop. So how are they doing that? They're doing that by curbside and car pickup. They're using Shipped, which is a service that allows you to use a person to help you get your goods. And they're also doing same-day delivery in many markets and offering 2-day delivery and online as well.
Target does expect margins to improve this year, and it did see a sharp increase in people coming into its stores and a nearly 30% increase in digital sales. Target is also hoping its own brands and partnerships will attract new customers.
As we think about the future of retail, we think a lot about convenience, helping customers just save time and money through different options. We think about product curation too. And curation matters because a lot of these products you can't get in other places.
Also on Target's radar, ongoing tensions with China over trade. CEO Brian Cornell says the company is watching the situation closely and will continue to be nimble and agile moving forward. For Nightly Business Report, I'm Kate Rogers.
Lowe's also blamed the weather for its disappointing quarter. That's where we begin tonight's market focus. The home improvement retailer said a late start to the spring season caused results to miss estimates, but the company did say it's encouraged by sales this month and expects that momentum to continue. Separately, the Wall Street Journal reported that billionaire investor Bill Ackman and hedge fund D.E. Shaw Group have each taken a $1 billion stake in Lowe's. Shares of Lowe's rose 10% to $94.69. Ralph Lauren reported better than expected profits and improved margins as customers bought more items at full price. Same-store sales and total revenue also beat expectations, and the shares climbed 14% to $133.33. The health insurer Anthem said it was buying privately held palliative care provider Aspire Health. The price tag of that deal wasn't disclosed, but the merger signals Anthem's desire to make a bigger push into medical care services. Anthem said the deal will allow it to provide a larger array of programs for consumers. Shares of Anthem fell fractionally to $232.06.
Cosmetics maker Revlon has appointed its first female CEO. The company says Deborah Perelman will take the helm as chief executive immediately. She's the daughter of Ronald Perelman, who has long been the majority owner of Revlon. Shares of the company fell nearly 7% on the news to $17.55. And then after the bell, the owner of Victoria's Secret cut its profit forecast for the year. L Brand's downbeat guidance overshadowed an otherwise solid quarter, with earnings topping expectations in that report. Shares traded initially lower in the extended session, but finished the regular session up a fraction to $34.05. Also after the bell, Williams-Sonoma reported stronger than expected revenue and profits. The home furniture retailer said that results were helped by demand for many of its brands and higher e-commerce sales as well. The company also increased its full-year revenue guidance. Shares initially popped in after hours. They also finished the regular session up nearly 4% to 49.16 or 18.
The biggest name in retail and the biggest name in home building are joining forces in a smart way using smart home technology. Amazon and Lennar have developed a new business model that could benefit both big time. Diana Olick is in Aldie, Virginia tonight.
What better place to sell smart home technology?
You're walking into an Amazon Experience Center.
Currently, traffic on your commute looks good.
Than in a tricked-out model smart home.
Where you're able to look, play, and potentially purchase many of the connected devices that you've heard about and seen on Amazon.com.
Even if I don't buy a Lennar home.
You got it.
Amazon and Lennar are teaming up in a show and sell collaboration.
Enjoy your Z's.
Using each other to hawk their wares.
It's not just gadgets.
It's not just gadgets. The smart home of today is really the way people expect to live, and that's ordering food as easily as it is opening doors, as it is turning on lights and turning on movies.
Alexa, movie time.
Okay.
And what you'll notice is lights will go down, shades will come down, lighting will go behind the TV. So this is an Amazon pantry.
So those little thingies in there, these, so you have your bounty, am I
Push
selling it?
Yep. And now that will arrive in your normal Amazon delivery. And this is the power of working with a company like Amazon.
So I never need to go to a supermarket again.
So whether you come to the home to try the technology or just see the tech, which is now standard in new Lennar homes while touring.
There's cross-pollination that could happen.
And while the gadgetry is cool, it's the service. Amazon Home Services, a growing business that Amazon is selling and Lennar is including.
So smart home is scary to a lot of people. When you put together all these incredibly connected devices, a lot of people say, I'm intrigued, but like, how's that gonna work for me? So when you buy a Lennar Everything's Included home, you get all the gadgets.
You get the guy.
But you get the guy too. And PJ over here would come and help you activate your home, teach you about it.
And PJ, or whoever from Amazon Services, works with you for 90 days to customize it all.
Alexa, turn the lights blue.
The home services business is becoming increasingly competitive. Facebook just announced that consumers can now shop for home service experts through its Facebook Marketplace. Big names in a big battle for your home and how you live in it. For Nightly Business Report, I'm Diana Olick in Aldie, Virginia.
And coming up, getting away this summer, prepare for packed planes. A rare look at what to watch tomorrow. A number of Fed officials will be speaking about economic conditions in the U.S. and abroad. We'll get the latest read on how many people are applying for unemployment benefits with the release of the weekly jobless claims, and a look at how many existing homes were recently sold. That is what we're watching for on Thursday.
Las Vegas casino workers have overwhelmingly voted to strike. The workers are eligible to walk off the job after June 1st if contract negotiations aren't reached before they expire at the end of the month. There has not been a widespread strike in Las Vegas since 1984.
Uber is now being valued at about $62 billion. This after the ride-hailing company said that 3 investors are looking to buy stakes in the firm. The announcement comes as Uber reports a 55% increase in gross bookings from a year earlier. Excluding one-time gains, Uber cut its losses in half from a year ago.
If you are planning to fly somewhere this summer, be prepared for a packed plane. The airlines are expecting to carry a record number of passengers. Phil LeBeau takes a look at the busy summer ahead in the sky.
Taking a trip this summer? Join the club. The airline industry is gearing up for an estimated 246 million passengers from June 1st through August 31st, an all-time high for those months, up 3.7% compared to last year.
What that means is at our peak, and it could be this weekend, 2.6 million people will travel on any one day. That's about 100,000 people a day more than last year.
What's driving the demand to take off? It's the combination of a strong economy, high consumer confidence, and relatively low airfares. In fact, compared to 3 years ago, airfares are down more than 10%. But airfares are starting to move higher, largely because the cost of jet fuel has jumped almost 50% in the last year. At United Airlines, CEO Oscar Munoz says the surge in fuel costs is worth watching, but so far, it's not hurting the company's bottom line. A message echoed by the CEO of Hawaiian Airlines.
We're not at a point where the level of oil is, really a significant threat to the profitability of our business.
As long as demand remains strong, airlines will try to raise fares so they can offset some of the fuel cost increases. But don't expect big airfare hikes. After all, competition from low-cost carriers or between airlines looking to pick up market share in a particular city means that the price we pay to fly should remain relatively low. Phil LeBeau, Nightly Business Report, Chicago.
Before we go, here's another look at the day on Wall Street. The Dow had been down 167 points, but finished up 52 to 24,886. The Nasdaq was up 47, and the S&P gained 8 points today.
Quite a turnaround.
Yes.
That does it for us tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening. See you tomorrow.